Ladies and gentlemen, good day and welcome to the Q1 FY23 conference call of Shemaroo Entertainment Limited, hosted by Velorum Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. I now hand the conference over to Ms. Chaiti Gujarati, Assistant Vice President at Velorum Advisors. Thank you, and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to you all. My name is Chaiti Gujarati from Velorum Advisors. We represent the investor relations of Shemaroo Entertainment Limited. On behalf of the company, I would like to thank all of you for participating in the company's earnings conference call for the first quarter of the financial year 2023. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating in today's earnings conference call and give it over to them for their opening remarks. We have with us Mr. Hiren Gadda, the CEO, and Mr. Amit Haria, the CFO. Now, I would like to hand over the call to Mr. Amit Haria for the opening statements.
Thank you, Chaiti. Good afternoon, everyone, and thank you for joining us today for our earnings call for the first quarter of the financial year 2023. I hope everyone is keeping safe and well. Let me give you some of the key highlights of the first quarter of financial year 2023. For the first quarter of the financial year 2023, the operational income stood at 96 crores and has witnessed a strong growth of 28% on YOY basis. EBITDA for the quarter was approximately 8 crores, a growth of 14% on a YOY basis. EBITDA margin stood at 8.4%, and a net profit reported at 20 lakhs with PAT margin of 0.26%. For the first quarter, the expenses on new initiative were 14 crores, and if you were to adjust for this investment in new initiative, the adjusted EBITDA from the existing operations would have been approximately 22 crores for the Q1 FY23. For the first quarter, the digital media revenue stood at around 48 crores, which were up 19% YOY. Traditional media revenues in the first quarter also stood at 48 crores, which were up 39% YOY. Now I would like to hand over the call to Mr. Hiren Gadda to brief on the operational highlights for the quarter.
Thank you, Amit, and good afternoon, everyone. In the quarter gone by, the ongoing challenges in the media sector continue to persist, but I'm happy to announce that despite all these challenges, the company has delivered strong revenue growth on a year-on-year basis and maintained positive bottom line trend during the quarter. The challenges faced have largely been driven on two counts. First is due to increased mobility on account of COVID unlocking period, affecting the overall media viewership and consumption across traditional and digital platforms. Additionally, advertising spends for traditional advertisers were affected due to rising input costs, uncertainty in global economic environment, and supply chain disruptions. And this was amplified by the slowdown in startup funding, which impacted the new age advertisers. Now to talk about each of our business verticals. Firstly, to start with the broadcasting vertical. In Shemaroo TV, we continued our focused efforts on content creation, distribution and marketing, which have resulted in higher ratings for the channel versus the previous quarter. We have also launched an original show, Wah Bhai Wah, during the quarter. In Shemaroo Umang, we opened at second position among the existing free-to-air general entertainment channels and continue to hold this position during the quarter. We also started monetizing the channel through advertisements from July 22. Hence, please note that the current quarter, which is Q1 number, do not include any revenue from Shemaroo Umang. In Shemaroo Marathi Bana, there were few technical changes on the DD Free Dish platform which adversely impacted the ratings of many channels and including Shemaroo Marathi Bana. But we changed programming strategy to include episodic content in addition to movies which traditionally we had been showing. This helped us restore the channel ratings towards the end of the quarter. On Shemaroo Me front, under Shemaroo Me Gujarati, we released 18 new titles during the quarter with content across movies, web series and plays. We released an original web series called Desai Diamond, which was well received by the audience, and we also did the digital world premiere for a blockbuster movie Sonu Tane Mara Par Bharosa Nahi Ke. Lastly, we launched a Telugu service on Shemaroo Me in USA. Our YouTube channel Filmi Gaane crossed 60 million subscribers, which was a very big milestone to have achieved, and the channel is now the 20th most subscribed channel in the world. Lastly, I'd like to inform you of some major organizational developments from our side. I'm happy to inform you that we have onboarded Mr. Orgo Chakravarti in the position of Chief Operating Officer. Orgo comes with immense experience of over 25 years, and in his previous stint he was with Disney Star India, where he was the Executive Vice President of Ad Sales for the entertainment business. And Kranti Gada will now be the President of New Business Opportunities. Apart from these two major developments, we have also continued onboarding and strengthening our leadership team across various business verticals with stalwarts from the industry. In conclusion, we remain committed, focused and confident of our long-term strategic growth plans despite all the headwinds faced. With that, I open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhwanil Desi from Turtle Capital. Please go ahead.
Hi, Hirenbhai. Good afternoon.
Yeah, good afternoon.
So Hirenbhai, the first question is, if I look at the traditional media numbers, it is now 34 crore has gone to 47, 48 crores. Can you give us some sense as to, compared to last year, what would be the breakup between the syndication and the broadcasting part? I mean, is this growth primarily driven by broadcasting part, or the syndication business has contributed to this growth?
Primarily, this growth has been driven by the broadcasting part.
Okay. And can you share some breakup on that? What would be the syndication?
We've not shared it in that way, but I can tell you that overall, we don't expect syndication to be, a significant contributor in the way forward. In fact, even here it's not that big a contributor. So I think it probably, as we go along, more than 70% of the traditional media will be contributed by the broadcasting business.
Okay, got it. Second question is, this quarter our burn rate is around 14 crores. And as you said that Umang has, in the last call also you had mentioned that, we'll be, charging off some content for Umang while we won't be generating revenue for that.
Yes.
So to that extent, our run rate compared to, last quarter has come down despite of launching new channel. So,
yes.
And we had said that, this year we expect 40-50 crore kind of a burn rate or investment in new initiatives. So going forward, is it safe to assume that this burn rate will come down as we monetize Umang and things pick up on, the other two channels?
Yeah, I think it's fairly, that's the line on which we are working on. And if I have to, in fact, I had in the last quarter also shared, discussed that the target investment for the year is approximately 50 crores, and at that time also we had said that it's likely to be more front-ended because Umang monetization is only likely to start towards the end of June or July maybe, and in a way that has played out on those lines only, and I expect that for the rest of the year the investment should overall investment should be lower compared to this quarter.
Okay. Okay. Third question is on, so I mean, again, wanted to get some sense. So Shemaroo, in terms of viewership, in terms of TRP, has done quite well, right? I mean, we have mentioned progressively it has gained in terms of ranking. So can you give us some sense, at least for Marathibana and Shemaroo, if not in absolute numbers, but in terms of your ad rates, how it has moved up in last year or so because of this improved rating? I mean, you may not share the exact numbers, but some sense on, whether it has resulted into some incremental rates for us or not, and if not, is it likely to happen in future?
Yeah. So I'll break it up. Shemaroo TV and Marathibana both have followed different trajectories. So Shemaroo TV, if I have to look at over the last about almost 10 to maybe 12 months, 10 to 11 months about, the ratings have grown by probably where we were at, say, bottom, maybe around 10 to 11 months back. From there we are up by more than 70% in terms of the ratings, and there is broadly a approximate maybe 6 to 8 weeks lag of translation of that into better revenue, and revenue broadly is directly linked to ratings growth or absolute ratings per se. So, and we've had a steady growth, which has given obviously a lot more predictability and stability to the revenue trajectory also. So to that extent, Shemaroo TV has been on a decent growth path. Of course, now with with Wah Bhai Wah being launched, we have added more original flavor to the overall programming. Marathibana, on the other hand, had, I would say, couple of factors play out. One was, as I shared earlier, there was a technical change on the free dish platform due to which the channel number of many channels changed because they had to migrate from one transponder to another, and therefore channel LCN number, as it is called, the local channel number, they changed it for many channels, and all those channels kind of got hit. So we lost reach and viewership because the viewers had to retune their boxes, and many of them are not savvy enough to retune and things like that. So it took us a while to kind of even reach 70 to 75% of the reach that we had pre-change, and so that was one factor. Other was, as far as the landscape is concerned, also we had a couple of Marathi channel launches in the landscape. So Star launched a movie channel called Prava Pictures, and obviously it comes, Star's Marathi GEC channel is the highest viewed channel, so they have a large audience base which they can kind of push their movie channel towards. So that also was another factor. So Shemaroo Marathibana was to that extent affected. What we did during the quarter, and to an extent we had already started the work on it prior to the quarter, but we brought in episodic content and reduced the dependency on movie programming. And what the episodic content did is that it created again a certain amount of appointment viewing and improved the time spent significantly, and it stabilized the ratings. Not only stabilized, actually brought in growth to the ratings. So we kind of, in fact, surpassed the pre-change COVID ratings in the last 2 or 3 weeks, meaning which is in the first couple of weeks of July. So we're now actually back to a decent trajectory. Of course, as I said earlier, this translation of this to the revenue may have a lag of 6 to 8 quarters. And sorry, 6 to 8 weeks. I'm so sorry, not quarters. I'm very sorry. Yeah. So that. So with this, at least we were, now getting a decent appointment viewing audience for the channel, and we have some exciting programming lined up in episodic itself, as well as what it also did is it helped us to give to space out some of our better performing movies because of that those movies ratings also kind of went up. So all put together, Marathi Bana is kind of by the end of the quarter was on a decent revival path. Yeah.
Then the next question is from the line of Harsh Peria, a professional investor. Please go ahead.
Hi. Can you give the breakup of your digital revenues this quarter? So how much came from YouTube, Telco versus Shemaroo?
YouTube is, so I'll give you the approximate breakup. YouTube is more than 60%. Telco is less than 10%, and the rest comes from a combination of syndication and Shemaroo.
Okay. And also the debt numbers, has it gone up from last quarter, and the inventory numbers?
The debt number, inventory is higher from last quarter by 4 crores. So 714 was a March inventory, and June inventory 718. Actually, if we were to round it up, 715 versus 719. And debt was 254 crores in March. It has gone up by 14 crores to 268.
Okay. Thanks for sharing the numbers. I have a question about your Marathi Bana episodic content. So what do you mean by episodic content on the movie channel? What does it mean?
So when we started the channel, the starting point was our own library, which basically contained movies, and therefore movie channel was a natural starting point for us. But there is obviously no no restriction for us to show other content, right, within the language, within the framework of the Marathi language. So we experimented. Firstly, we experimented with the devotional content, which delivered very good ratings and had very good traction with the audiences. Then we further did research that where the audiences were missing out on content which was episodic or serialized in nature. So therefore we experimented with some serials to say that, okay, let's try 1 hour of a serial to see whether it kind of gets any traction or not. So we put up, in fact, the Ramayana, which is the old Ramanand Sagar Ramayana, which was dubbed, which we got it dubbed in Marathi and we showed that on the channel, and that delivered very well. And it gave us the confidence that if we mix up the programming with a combination of episodic serialized content and movies. So it's not that we gave up movie programming, but the overall nature of the channel in terms of content mix is a combination of movies, serials, and devotional content. So that is what is currently the programming, and that is kind of delivering reasonably well.
So in the episodic, you're mostly targeting like religious or devotional content, or you're also targeting general entertainment now?
So there is no restriction to target devotional or episodic. We started with devotional. So the hypothesis was that since there is anyway a lot of traction on our devotional content which we run on the channel, let's kind of, in a way, mythology becomes an extension of that devotional content, which, having worked well for us, now gives us more confidence that we could extend, one or two drama shows to that extent.
Okay, that makes sense. My last question is on your Telugu services, I think, which you launched in USA. Can you talk a bit more about it? So it's on your Shemaroo Me application.
Yeah, so it's this is only for US. So we've tied up with a large Telugu content partner, India-based Telugu content partner. They needed reach in US. We already have Shemaroo Me, in US, and we have a team in US which is already distributing, selling, and marketing Shemaroo Me. So adding one more category of content to sell to the Indian diaspora over there was an easy thing to do. And when we map the overall audience base, Telugu is a very, very large community, and it's a very well-to-do community, the Telugu-speaking expatriates in USA. So in a way, this has just been launched, so we also are in the process of setting the marketing and selling aspects of that. But the content mix is very potent, and there is a large audience base. In fact, we've offered it free till 15th August for trials, so for free trials. So yeah, that's it.
Okay, good luck with this initiative, and that's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Daniel Desai from Turtle Capital. Please go ahead.
Hi, Hiren, sorry, I got disconnected. So two more questions. So I think our employee cost, has gone up again from 16 crore to 18 crores. So this is, and I think, in Q3 when the cost had gone up, there was some one-off, and then it had come down in Q4 again. So now, is this the new run rate that we should look at in terms of employee cost?
Yeah, so Q3 always is we'll have a one-off in each year, because that's when we pay out our performance-linked incentives.
Right.
So every year, if you go back, you will find Q3 will be having the one-offs. Having said that, to answer your question, yeah, this is the new normal for 2 or 3 reasons. One is we've obviously April onwards the appraisal cycle kicks in, so there is some normal increment which we have done on our steady base. And secondly, as I mentioned also in my opening remarks, that we now been strengthening up our team with a lot of new talent infusion. So there is and as we are now headed into a very strong growth opportunities, the idea is how can we play this on the front foot, and as is a people business, so building our whole talent pool and leadership team much more strongly. I think that has been the thought process, and we've been doing it for now about 2 quarters. In addition to that, of course, with the launch of Shemaroo Umang also, there is more people that needed to be added over there.
Okay, understood. Second question is on Shemaroo Umang. So I think it's commendable that in the launch in 3 months we are the second most viewed FTA GEC channel. And I think if I understand correctly, we had not put a lot of effort in terms of distribution yet, right? I mean, you had mentioned in the last call that maybe it will be more organic and we may not want to go full hog in terms of increasing distribution reach. So without that, if we are able to achieve that, are we planning to increase the effort on distribution reach to kind of move forward? How do you think about that?
Yeah, so you are absolutely right. We've not gone whole hog in terms of distribution reach. So to that extent, Umang is not present on any of the DTH platforms yet, which whether it's Tata Play, Airtel, Dish TV, etc. We have done few ground tie-ups slowly but steadily, and tried to keep the overall costs relatively low. In many places, we've tried to leverage our relationship for Marathi Bana and Shemaroo TV to just on some certain incremental costs if we could add Umang. So we try to keep it as reasonable and low as possible. And so happy that the audience traction for Umang has been very good. In fact, so ultimately, based on the monetization, we will slowly ramp up the distribution, and we'll also test waters to see whether that additional investment is yielding any additional rating and revenue translation, and what is the ROI on that, and accordingly we will go about it. We will try and be much relatively more measured about it. Also, on the other hand, there are certain audiences which are, I would say, low-hanging fruits available on other platforms also. If we are able to put that together, what it does is it increases the overall viewership base, and which in a way helps attract maybe some different kind of additional advertisers also. So that that finally helps push up the revenue pie.
Okay. And last question, Hiran bhai, from my side.
Yeah.
So all these 3 channels put together, I mean, how do you look at the overall revenue potential of these 3 channels put together? Is it in the range of 300-400 crores or more? How should we think about that?
No, 300-400 crores for the 3 channels. No, definitely not. At least at this point in time. But I would say not this year at least. Maybe.
No, I'm not saying from this year perspective. I'm saying, let's say 2-3 years out.
Okay. Oh, that way. Yeah, I mean, see, again, if I were to take a step back and have a overall understanding of 3 pies. One is the GEC pie, which is about 7,000 to 8,000 crores, and actually, contrary to popular belief, there is limited competition for such a large pie. And if you have a channel, in fact, we have a 2 channel offerings. It kind of, you can play a lot of things on that in a certain way. which gives a certain potential. Marathi pie has also been growing. We looked at it at around 800 to 1,000. I would imagine that it could have grown by about 15-20% from there by now. So we are talking of roughly maybe 900 to 1100 kind of crores pie. Again, so that's the second pie in a different way if we were to look at it. Third pie, of course, is the FTA pie, the free-to-air pie. Free-to-air with free dish numbers having expanded significantly. I think they are actually that pie I think is will be growing significantly more because newer set of advertisers etc. are coming. Lot of users have migrated from platforms like DTH and cable into free dish, and the advertiser is lot of advertisers are losing out on those audiences, and if they have to target that, they have to come onto free dish. So that's a pie. So if I have to, in terms of if you are saying potential of next 3-4 years, yeah, I mean those kind of numbers are very, very much possible. I thought you are asking me this year.
No, I'm not asking you this year. I'm saying that overall from company perspective,
yeah.
when
It's a possibility, what you're saying.
Okay, got it. Thanks.
Yeah.
Thank you. Reminder to all the participants to press star and 1 to ask a question. The next question is from the line of Nitin Sharma from MC Pro. Please go ahead.
Hello, am I audible?
Yeah.
Hi, thanks for taking my question. Couple of questions, if I may.
Yeah.
First of all, would want to understand any update on how OTT syndication / Shemaroo is doing in terms of numbers. Some color on it.
Syndication, I would say, if I were to say trend-wise, it's upward. We within that there could be 1 or 2 quarters up and down because it is a relatively more deal-based business. But the underlying consumption trends for most of the platforms has been reasonable. As I said earlier that so COVID put everyone into a new normal. Post-COVID, there was some tempering on consumption because of unlock and people going kind of back to work or back outdoors kind of a thing. But still, there is a new normal which essentially means that there is a certain consumption and therefore a certain content need is there. I mean, we've seen YouTube consumption grow, all our other consumption. So to that extent, the syndication business trending wise is reasonable and healthy. On Shemaroo, unfortunately at this point we are not, at least for this quarter, we are not in a position to share numbers. All I can say is that the mind share that we've now managed to garner as far as Gujarati is concerned is huge, and literally we've become a large and virtually a default service or player for Gujarati entertainment on the digital side, which is Shemaroo Gujarati. And in a way it is reflected in the content, in the programming. The good thing is that it has also reflected in the consumption metrics and the revenue trends. So I think we are in a very good place. The only tempering or caveat I would say is that overall digital OTT business is a slightly longer time frame game in terms of the real scale and maturity. We believe will take probably another about 2 years for it. But then you have to start building the mindshare and consumer traction, content, you're offering everything, from now, so that when it scales up, you are, in a leadership position, which really is very difficult to dethrone.
Okay. A small bookkeeping question. Can you please provide the breakup of digital revenue segment and how much was the cash balance at the end of the quarter?
I just gave all these numbers, actually.
I got disconnected in between, if possible.
I'll repeat it. Don't worry. No problem. So YouTube has been is more than 60% of digital. Telco is less than 10%, and the rest of it is combination of Shemaroo and syndication.
Okay, and the cash balance?
Cash balance. So total debt has grown from 254 crores in March to 268 crores in June. And the inventory from 715 in March by 4 crores to 719 in June.
Okay, and cash number?
Cash, so we work on a CC cycle, so it's, the debt is what is more important to track.
Okay, understood. Just one last question. So your traditional media revenue typically grows in the second quarter, roughly grows around 30 to 40% more than the first quarter historically, minus the COVID period. Do you think similar trend can be expected? I know it's a small window, but generally, do you think, given all the macro headwinds, similar expectation should be fair?
Traditional media, you're asking?
Yes.
Too early days to say, because July, we're literally into 2 weeks of July. But definitely some of the macro headwinds have hit the advertisers. We are hopeful that this. So obviously there is one additional factor over here, which is the broadcasting business, which is driving our growth. So this year at least we are hoping that since Shemaroo Umang monetization has just begun, we should be having a certain revenue visibility.
Okay, understood. Yeah. Thank you.
Thank you very much. The next question is from the line of Shikha Nathan from Equity Capital. Please go ahead.
Hello.
Yeah.
Hi, sir. I just had a couple of questions. Most of my questions have been answered. So out of the total expenses, is any part inventory that has been written off?
Sorry?
Out of our total expenditure, is any part inventory that has been written off this quarter? Yes.
Apart, so you mean to say over and above normal charging off is what you're saying?
Yes.
No.
And can you give me the figure of the normal charging off?
It's part of the operational cost, so give it a minute.
I'll come back to you on this in a minute. Shikha?
Okay. Yes, sir. So, given our new business and the channels and everything, has there been any change in our accounting policy or in our write-off policy?
Not yet, but as I have shared earlier also, we are formulating the new policy based on because there is a new income stream, and obviously it changes some of the consumption pattern. So we are just observing some of the trends in terms of consumption and income. This thing before we formulate a policy which is robust enough to hold the test of time.
All right, sir. Congratulations on Umang being number 2. Can you just help me understand this entire business a little better? So, of the total ad pie available to Umang, Shemaroo TV, and Marathi Bana, how much percentage does each channel get? If you can tell us the current market share of all 3.
If I have to look at the overall addressable pie, we would, I guess, be less than maybe 2 or 3%, or maybe even maximum within 5% of the addressable pie.
And this holds true for all 3.
Combined, I'm saying if I have to combine the addressable pie for Shemaroo TV, Umang, and Marathi Bana, we'll be at less than 5% of that.
Okay, and do we have anything in mind of how this is to move or what we expect over the next 3 years?
No, obviously our effort is to grow it. There are multiple players in this, and I don't believe anyone has a significantly high market share, more than maybe. Very few people may be having double-digit market share itself in this. And definitely we are working towards growing the market share, because only then the revenue share will increase.
Okay. And sir, out of the total ad time available to Umang, Shemaroo TV, and Marathi Bana, how much is currently being utilized?
Inventory on air, more or less 100%.
For all 3, even Umang?
We are still building up, so I think it may take 1 or 2 months more to reach there, and we may hold some of the inventory for to be able to garner better realization rates. So that's going to be tactical, I would believe. But Shemaroo TV and Marathi Bana are currently at 100% fill rate.
Okay. So what is the current cash conversion cycle?
Amit will be able to give you one. So, see, cash conversion cycle, if you mean to add inventory, then it's obviously long-ended. And secondly, each business has its own this thing. What you will see at an aggregate level is for the entire company. But if I were to, that will probably be more than 900 days because of the inventory. But each business has its own cycle, and those are significantly lower because inventory is an asset base if you look at it in a different way. So out of that, I think the cycles are pretty normal. Most of our debtors, they pay us.
So receivables is around 60 odd days.
Yeah.
And payable is around 70 days.
Yeah.
Okay. So are we en route to break even?
Yeah.
And at what levels do we break even? At like 100 crore, 120, 130? What level can we assume?
That's not something. Which business are you talking of, Shikha?
Of at least the 2 channels, not counting Umang as of now.
So as you will appreciate, I am not in a position to give you absolute numbers on what is that level and all of that. But as I have shared or discussed in the past, we towards the end of this quarter is when we are targeting to break even, and we are fairly on track for that.
Okay. And also, could you also help me with what tax rate we'd be looking at for this year, assuming last year we might have had some losses carried forward and all of that?
Sorry, please, could you please come again?
What tax rate should we be looking at for this year?
Tax rate would be in the region of around 25%.
No, she's saying considering that we have a loss.
Yeah.
Do we have any losses that we can set off?
I'm sorry to interrupt, Ms. Nathan. You will have to join the queue again as we have other participants waiting for their turn.
Yes, I'm just waiting for the answer to my last question.
Okay, ma'am. That would be your last question now.
Okay.
Yes.
So, like I said, we considering all the tax shields available, the tax rate would be in the region of around 25%.
Okay. Considering everything, considering set-offs we might have, etc.
Yeah.
Okay. Thank you so much.
Thank you. The next question is from the line of Ankit Gutka from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, on the broadcasting side, do you think, we now have 3 channels, do you think there is we have some plans to add 1 or 2 more channels over the next year or 2, or do you think, we want to first stabilize all 3 channels and then see, then take the next step forward?
So the question what you are asking actually itself is the answer, because they are both in different time frames. So obviously in the short term we want to stabilize and reach a certain traction and operating level financially and operationally both. But yeah, in the over the next year or 2 there will be more channels as we add to the network, and the network effect of having more channels obviously has its own advantages in many ways, and we'll definitely be driving towards that. But yeah, in the short term, the stabilization of the current operations is an important target that we are working towards.
Okay, but let's say over the not this year, but next 24 25, we may be looking to add few channels to our booking.
So see, what we would like to do is look at so we still believe that there are many underserved opportunities in this space, and audiences are looking for new and interesting offerings, and we want to essentially look at serving the audiences with that, and to that extent, yeah, we would be looking at adding channels. But what we are very clear is that we don't want to spend above a certain level in terms of the investment that we want to do. So it's going to be a prudent cash flow and ROI focused thing, as well as something where we have other synergies to monetize the content across, say, digital platforms, or building some additional advantages strategically. So
okay. On next question was on the digital side. If you look at digital media revenue, they have broadly been in the line of around 45 to 48 crore per quarter over the past 3 quarters, and there hasn't been any significant jump in that. So what is happening on that front, and over the next?
I would beg to differ, because if you see the number by itself, that definitely the number, for example, in Q1 of last year itself was 40 crores, which has grown up to 48 crores. So 20% growth we are seeing even this year. This is a business which has a certain amount of seasonality. So quarter on quarter is very difficult to to look at. It's more year-on-year kind of a thing. For example, because of, say, ad spend, etc., is seasonal. So, yeah,
Sure.
quarter sometimes maybe giving an optical impression that it's stagnated, but you really need to see year-on-year. I mean, if you see FY21, it was 150 crores, which has gone in FY22 to 181 crores, which is a 21% growth. And this quarter also, on a year-on-year basis, it's up by nearly 20%.
So do you think, FY23 and 24 we can easily grow by 20% in our digital media revenues?
There are, as I said in my opening remarks, there are two headwinds overall that advertising is face. One is something that the overall advertising pie revenue spends are facing, which is all the inflation and demand challenge that many of the advertisers are facing. Second headwind, which a lot of the digital advertisers or new age advertisers are facing, is the whole funding challenge in the startup ecosystem. So they have definitely been some of the large spenders in the on digital media, and there is some amount of slowdown or pullback from the their source of funds. So that is definitely likely to be a bump for speed bump for maybe a couple of quarters overall. The trend, if I have to project 3 years trend, I think digital is easily at a 20% CAGR for 3 years. Now, couple of quarters speed bump may happen, but I feel will cover up subsequently, because the underlying consumption growth is growing very strongly.
Okay. So there might be some short-term challenges, but you expect that the growth will be good over once there's the whole thing, inflation and the startup funding issue stabilizes.
Yeah, because see, it's not that all startups are not funded or are not this thing. Many startups are getting the funding. At the same time, if we again map it over a 3-year period, a lot of this will kind of get addressed and evened out and move to next level, kind of a thing.
Sure. And on the YouTube side, how has been our YouTube CPM performing, and has it improved over the last 1 year?
No, this quarter the CPMs have been challenged because of these factors. Definitely.
Okay.
We have in fact grown quite nicely on the views side, which has helped us grow the overall number, but the CPM this quarter has been challenged.
Okay, but and over the last, prior to this quarter, has it improved, or how is the trend been?
So what is happening is that the views on YouTube is growing at a humongous rate. So I would say that CPM has all been trending down probably for last 6 years. Okay.
Mm-hmm.
But what is happening is obviously the fill rate keeps growing because the spends are growing. And secondly, if I have to add also, YouTube itself innovates a lot. So, introducing a second 2 ads instead of 1, having more mid-rolls and things like that. So the overall revenue pie has obviously jumped up significantly. But yeah, because of the huge addition of numbers and views, the inventory available, keeps growing, and which in a way impacts the CPM since the denominator keeps growing.
Okay. Thank you. And wish you all the best.
Thank you.
Yeah.
The next question is from the line of Rishikesh Oja from Robo Capital. Please go ahead.
Hi, sir. So previously you said about break-even in Q2 end. So
Yeah.
is this for Marathi Bana and Shemaroo TV?
Yes.
Okay. And you also said that for the broadcasting part, you have maybe within 5% market share of the addressable market.
Less than 5. I mean, I actually I'm not in a position to give you that number, but it's nothing significant. I mean, okay, sorry, that's not the right way to put it. It's relatively low, obviously, which means that the headroom available is much more.
Okay, so what is the addressable market there?
So Hindi GEC address ad pie is at around 7 to 8,000 crores. Marathi is estimated at around 900 to 1100 crores. So if we combine the two, we are at about 8 to 9,000 crore ad pie between Hindi GEC and Marathi.
Okay. Okay. And sir, can you give any idea on the break even on our Shemaroo OTT?
As I shared earlier also, the overall OTT business seems to be a slightly more longer drawn business for the as far as breaking even or scaling rather is concerned. And without scale, break even is going to be a challenge. We expect that the industry's real scaling or growth may take probably about 2 years more to actually start kicking in. Having said that, what I also added is that we have to obviously create our own share of mind and manage the whole show within within reasonable costs, so that we don't end up overspending for the in this whole process. So that's what I would say balance we've been trying to achieve, which is maintaining a healthy offering on the service. In fact, exciting offering rather. It's not just healthy, it's an extremely exciting offering, which in a way helps us push and grow the share of mind. And on the other hand, doing all of that within reasonable costs, so that we don't end up burning significantly high.
Okay, sir. No problem. Thank you very much.
Yeah.
Thank you. The next question is from the line of Sudha Mehta from Equity Capital. Please go ahead.
Hello.
Yeah.
Yes, so I just had one follow-up question. Earlier we said that our inventory on air is currently being used at 100% in this Shemaroo TV and Marathi Bana.
Yeah.
So from where are we expecting growth then, if you could just help me understand that better?
Growth is always from the ad rate going up, which comes from viewership growth.
Okay, so as viewership growth in...
So understand one thing, TV business, never about, inventory fill you will find very high for most channels, because, no one will, it's a perishable commodity or a perishable goods. So, every inventory not filled is revenue lost, which we will never regain. So all channels always fill up inventory fully. The growth always comes from growth in the effective rate of the 10 seconds, which is called the ER, which comes from the growth of viewership or TRP as it is considered. And this is something that at the beginning of the call I kind of shared the fact that in the last say 10 months or so, the Shemaroo TV's viewership has been trending up, and we are currently at 70% higher TRP compared to where we were 10 months back, which obviously with a certain lag translates into a 70% higher revenue for the same fill. So fill generally doesn't change any significant number.
Right. Okay. Thank you so much.
Thank you.
Yeah.
The next question is from the line of Dr. Rohit Trivedi, an individual investor. Please go ahead.
Thank you. Hi, Hiren. So my first question is about Shemaroo. So in Shemaroo, we have got two streams of revenue, which is telco partnership and individual subscription.
Yes.
Now, knowing the industry trends and kind of right across other countries, telco partnership gives revenue, but is not kind of right very much profit accretive. It's the individual subscription that most kind of right players are now focusing upon since last few quarters. So what have we observed in Shemaroo ourselves over kind of right, let's say, last 3 or 4 quarters, how the telco versus individual subscriptions are shaping up, and what is the trend that we see going forward, please?
Sure. Very, very good question. And I'll just tell you how our thinking has been, I would say literally from the day one of when we started Shemaroo's whole B2C journey. What we said is that there is absolutely no alternative to building mindshare, because unless and until we build mindshare, we cannot build wallet share. So we've been very clear about the fact that all our key monitorables internally are, key success factors or key performance indicators are all linked to, what the paying customer is doing and how that is growing. Okay. Having said that, as I was alluding to one of the earlier questions also, is the fact that considering that this is a slightly longer drawn, game, there is a certain revenue which is available through the telco partnerships, which we can pick up, which can help us, fund some of the investment that we intend to do. So what we have done is try to optimize that to help us, obviously, subsidize some of the investment that has been going into it. But as far as our core monitorables, our core effort, etc., the whole transition, in fact, of this business to a significant B2C offering, right from the GUI, graphic user interface, to call center, to virtually every aspect, this is something that we have been singularly focusing on, and which is why, as I even earlier said, that I'm very happy with the kind of response we've received, and it's an extremely exciting offering for the consumer. So our consumption traction, etc., is very strong.
Thanks, Hiren. But I was so rather than referring to your own efforts and product, I was referring to individual consumer traction. So my question specifically is not about the product, not about the efforts of the company, but the actual output that we are visibly seeing right on the street. It's not in terms of number. That's perfectly fine. I can understand. But let's say that has the needle moved significantly from telco to individual subscribers over last 3-4 quarters? Have you observed that, or is it still?
Telco is not something that we have significantly focused on, and therefore the movement, and something that I've just discussed some time back on this call also, is the fact that the overall traction that we have seen from thanks to these efforts and from individual users and the final ultimate consumers, the paying consumers, the growth has been quite significant, and we are well and truly entrenched in this space, as far as the consumer is concerned, and that is reflecting in virtually all the consumption metrics that we are monitoring, and definitely the growth over there is significant.
That's really, really heartening to know, because I think that could be a blue horse over a period of time. Thank you. So my second question is, I was looking at the annual reports of last 7 to 8 years. Now, what has happened is, if we from the footnote add purchase plus work cost, which is your cost of material purchased. So let's say in 2019 and 2020, it was 390 and 440 crore. Now, in last 2 years, it has come down significantly to 230 crore. That means on one side, we are buying a lot less inventory as compared to 2018 and 19. I know it's linked to change in our business model from B2B to B2C and less focus on the syndication business and everything. So I'm attending the call for last 3-4 years, right? So I know that part of it. But I was wondering that is this purchase of kind of right close to 230 crore a year sustainable, looking at the business model that has been now setting up, and where kind of right this figure is expected to move, because this figure to a greater extent will determine operating leverage over next 2 to 3 years. So let's say if our revenue jumps and along with that this 230 crore again comes to 400 crore, then there is no chance of operating leverage, right? While if this figure stays stable, that is cost of material purchase to 230 to 50 crore and revenue jumps up significantly, then there is a possibility of operating leverage, right? So what is happening over there, if you can, and what is the thought process of management over there, if you can help us understand? Thank you.
Sure. So I'll try and address it in slightly different way. So the direct answer to that is that it will ultimately be a combination of both. Okay. There is, to grow beyond a certain level, obviously one needs to invest. So there is a certain investment that it will take. The question or the real thing to understand is that new growth or the new investment or the new initiative that we are talking of is that in a operating positive environment financially, and once that happens, then the operating leverage kind of kicks in. So one cannot grow, say if supposing hypothetically if I have to scale up from say whatever x to say 1.5x, that cannot happen with the same cost structure. There will be a additional cost structure involved in that, but the whole idea is if the new initiatives can be operating positive, contributing, then the operating leverage kind of kicks in. Therefore, if in a journey of say growing from x to 1.5x, possibly the cost on the investment on content may not necessarily grow from y to 1.5y. It may grow from y to 1.3 or 1.25y. Therefore, I said it's a combination of both. One cannot have a black or white situation on this. So to give you a different example, we launched Umang, right? So Umang will need content for programming. Now the question is, will Umang break even and make money? If it does, then I'm kicking in operating leverage, and that's really the effort that we are overall working towards, and that has been the conversation of the last 3 to 4 quarters, that how this business breaks even and generates the positive cash flow.
Perfect. So linked to that, my last question would be then just one thing. So in the inflationary environment that we have already entered into now globally, right? And I believe the same thing would be there in India. So how are we seeing the content cost shaping up kind of, right? Has it gone up along with the kind of like inflationary trend? And what do we see forward, let's say for next 3 to 4 quarters and the effect of that on the business?
I think overall, we can expect the inflation on content cost to kind of be in the line of what the overall inflation trend is. In short term, it may be higher also or lower also, but I think trending, if you ask me, a medium term trend would be fairly in line with with the inflationary trend. Here, if I have to kind of further break it up, there are two aspects. The talent cost, will probably go higher than inflation, but then there are many other costs which may be counter trending, certain due to say technology, better technology availability, etc. Some of the processing costs, etc. actually may stagnate or be better optimized or be lower, etc. So, but net put together, I think it would trend with the overall inflation trend.
Perfect. So to add on to that kind of, I just wanting, so going forward, are we looking to acquire more of the content from outside or more have in-house kind of content development or collaborative content development costs? So where the cost kind of would lie more? Let's say acquiring perpetual content or developing the kind of required content in-house for our broadcasting channel?
So we are not a content producer. So we don't intend to really, be big time in terms of producing content. What we, for example, even for couple of shows that are currently original shows which are on air also, or what we may have put up for Shemaroo Me also, everything is commissioned content. So that is something that will continue. And all of that, what we are commissioning, we are owning 100% perpetual copyright to that. And so to that extent, in fact, the library is, obviously growing and building up. As far as films is concerned, obviously, the erstwhile model, because the film IPR ownership is, a different ecosystem, and that anyway, I mean, we are well versed with that. It anyway is a core domain for us. So that anyway, film library acquisition would continue, on the similar lines. We currently don't intend to get into film production. I mean, we've not done it, and that's really not our.
Yeah, so here was my question. So let me rephrase it. Are we leaning more towards buying the movie IPR content, or more towards going for the collaborative / what kind of you said that content outsourcing for our in-house captive need going forward? So what is the
our focus is on the consumer. So whatever works with the consumer is something that we will go. So if we have to build our B2C offerings, whether it's Shemaroo Me, it's the channels, either way the consumer is dictating what we are showing them, and therefore in the back end, that's what is dictating what we will do with it. And to that extent, I'm sorry, I'm not able to give you a direct answer. It will be different for each business, because what is the consumer looking for versus what is available and what needs to be created will be different for each of the offering or each of the business.
Thank you.
Yeah.
Thank you. Anyone who wishes to ask a question may press star and 1. As there are no further questions, I now hand the conference over to Mr. Hiren Gada from Shemaroo Entertainment Limited for closing comments.
Thank you everyone for joining us for the earnings call for Q1 of FY23, and looking forward to seeing you all next quarter. Thank you. Bye.
On behalf of Shemaroo Entertainment Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.